The fuel behind crude's run has been a huge basis for debate as investors worry over consumption growth. Here now with his outlook, Matt Simmons, chairman of Simmons Company International and author of Twilight in the Desert, The Coming Oil Shock in the World Economy. Good morning, Matt.
Good morning. How are you?
Good. You must feel like Nostradamus. When did you publish that book? It was a couple of years ago, wasn't it?
No, it was actually 3 years ago on Tuesday.
3 years. Oil was where?
I think oil was about 45 to 50, and the conventional wisdom was it was far too high. It was got to 27.
Well, that doesn't.
I think they just forgot.
Yeah, that doesn't mean
if put a 1 on it.
Because you've been so right so far. Doesn't mean you just get a free pass on everything, though, Matt. My one question I need to ask that maybe you know the answer to this is that we seem to think that the Saudis are overstating the amount of oil that they have, and that we really shouldn't believe what they say because they're trying to fool us there. And I just can't understand why it's in their interest to fool us on the high side when they could charge more if they would lowball it, because the supply-demand would be more favorable. Why are they constantly telling us that they have more than they actually have?
You know, I'm very sympathetic to the leadership of Saudi Arabia, and I think they were basically hoodwinked by the major oil companies 40 years ago, when they didn't know anything about oil, and they basically were told that they had unlimited amounts of oil that would never run out, and it was really finally a small band of people within Saudi Arabia that realized that these oil fields were getting old, that started the whole process of bringing high technology and to try to make sure that they basically kept it going as long as they did. So I think that it's very convenient for us to blame the Saudis. I think that within Saudi Arabia there are some unbelievably overly optimistic proponents. That's a whole different issue. But I think that why they believe that, they were educated by us, so it was our fault.
All right. Let me ask you one other question that people write in about. 80% of the earth covered by water. How do we know that there's not 10 times as much oil? Admittedly hard to get, but at $140 we could probably afford it. How do we not know that there's huge reserves that we don't even know about that would throw a wrench into the whole peak oil theory?
We actually don't know, because until an oil field is discovered, you can make up all sorts of theories. But we are so utterly out of offshore drilling rigs, and you can only look at the intense amount of rigs that Petrobras is trying to hire over the next decade, that even if there is stuff out there, we've run out the clock. We don't have any way to find it. We don't have any way to produce it, and to offset a decline rate of you know, as modest as maybe 4 or 5% per year, you have to add a new Iran. The decline rate probably is going to end up averaging 10 to 15% per year over the next decade. So you literally just couldn't find enough to actually keep flat, let alone grow.
So peak oil is not that the planet's out of hydrocarbons. It's that.
No, it's just that we couldn't get them out of the ground. If we could convert ourselves into microbes and go back, you know, and live inside oil fields, there's going to be a lot of oil left behind. So we'll never run out. We're just Yep.
They're working on technology to do that very thing.
Yeah, that's the optimist theory. We're working on technology. The problem is no one's actually doing it.
All right, Matt. So let's say that we acknowledge these things. Then let's start thinking, though, about how habits could change in this country in terms of SUVs. And the U.S. is still a huge user. So if we did have let's just for argument's sake say we have a 10% decline in the oil that the U.S. uses, and that maybe we find a little bit more in different places. Couldn't that buy us some time to where $140 or $200 oil isn't in the cards?
You know, anything's possible. It's not likely. You know, having spent 39 years in investment banking, it's always very, very important to be realistic and come up with a scenario that works versus one that you'd like to have work. So, you know, if we dropped our oil use by 10% just in the United States, that would we consume 20 to 21 million barrels a day of oil. So that would be 2 million barrels a day of oil that the world doesn't need. On the other hand, China over the last 1.5 years increased by 2 million barrels a day. So this is a global problem.
One great thing about you, Matt, is that whenever you're on the show, you definitely evoke some viewer reaction. We'll inevitably get some questions about how you're positioned, how you profit from furthering this message. Can you just address that?
Well, I can tell you how much I spend addressing this, which is a fair amount of money. Yeah, I have a very significant portfolio that I've built up over the last 25, 30 years in energy stocks. So I think it's the only way that anyone's going to make any money. But the idea that somehow or another I'm doing this to peddle my position is preposterous. Other than a few modest changes, in fact, the last big stock buy I did was buying steel stocks about 6 weeks ago when I realized that we were running out of steel.
So then it's a combination of the incremental demand from China and India that we didn't have 20 years ago, let's say, along with the very real possibility that these fields are getting old and aren't going to produce as much. So it's those two factors.
Well,
because Matt,
and also the fact that
go ahead.
Also the fact that our usable inventories of diesel and gasoline are the lowest we've ever had. So we have the reason diesel prices are now almost $1 a gallon over gasoline is that we have very limited amounts of spare diesel. It's not that there's no speculation on diesel. We're in a tight market. What we need to worry about is not high prices but shortages.
No, we haven't seen that yet.
Yeah.
It's just then we just have to come to grips with. It's just in the investment world to say it's different this time is always, you kind of go, ooh, when you hear it's different this time. And every other time with any commodity, the demand destruction combined with how everybody wants to run out. I'm thinking about drilling somewhere if you can get 130 or 150 or 200. Yeah. Everybody wants to find it, and everybody cuts back. And usually those two factors get us back to where we were, and it's like self-equilibrate. So we have to accept that it's different this time.
Well, the economists ought to basically be embarrassed, because the energy economists are the worst of the lot. They basically, kept saying it's different this time. 10 years ago when oil prices were 10, they said it's going to go to 5. It's different this time. So I think that they ought to basically say we were wrong. We had no idea what we were talking about, and just get off the air.
All right.
On that note.
All right, Matt. Thank you. And we'll see you again
You're
soon.
very welcome.
I have a feeling that we're going to need you to talk to you
Yep.
again and again and again.
Oil's cheap. Oil prices are very cheap.